Welcome everybody to the webinar here today. My name is Richard C. Wilson. I'm founder of the Family Office Club. I started the Family Office Club in 2007. And since then, we've grown our 14-person team. We've hosted 130 live events. I've published 13 books. We've produced 1,800 videos, helped start about 100 family offices, which are ultra-wealthy investments and wealth management organizations. And I want to welcome you here today. We're going to talk about how to leverage our investor club, some of these strategies you can use to leverage in the investor club to raise capital. We'll also be giving you strategies and insights that you can go use to get more deals done and improve your investor relations throughout the webinar. And at the end, we're going to show you how to navigate our membership best, what the membership options are, and hopefully get you started as a member today, as we can be onboarding you tomorrow and the next day with our team and through Jennifer through an onboarding phone call. So let's jump right into the content. We always get questions on whether we're recording this. Yes, we are. Just triple check that. We're also going to be sending you the presentation files for the PowerPoint I'll be going through. My presentation style is not to go over one concept and talk about it for an hour because I find that's very boring to someone who already gets it really quickly or already knows that concept. If you've ever come to our workshops or been to our investor summits or read one of our books, you'll know that I like to cover many different ideas and move through things pretty quickly. If you have questions, you can ask it in the Q&A section. We'll be spending maybe 30 minutes doing Q&A after the call. We spent about 40 minutes doing Q&A last week. Or you can email my team. We'll be sending you a thank you email in response to this. You can always go to familyoffices.com and live chat with my team right now, or give them a phone call. It's 305-503-9077. And you can always give them a phone call as well for any immediate questions. So let me do the share screen again to jump right into the slides, and then we'll start moving through the content. All right, so today we're going to talk about 7 strategies to leverage our investor club and raise capital. To start out with, I want to introduce myself. I think that in this industry, a lot of the people who have been around have only been around for 5 to 7 years, because 10 years ago, people didn't use the word family office so much. We got started in 2007, and I could not find a trail guide to help me learn more about the industry. So I started sharing everything I was learning as I was meeting with family offices, and found that even family offices themselves only meet with a few of their peers per year, maybe 20 to 40 of their peers per year. They're not meeting with 400 of their peers. They're not spending the time to go to 30 live events per year usually. And so our view of the forest has been helpful to both investors and people raising capital. And that's how our investor club operates. When we do investor summits, we don't pay a famous past Army general or some best-selling book author or somebody who's got their own masterclass session or a former president. We're having real investors on stage that want to look at deals, and that's why they want to get deal flow. That's also why we do our daily investor mandates and interview investors every day, is to help them get deal flow. So that's how the interactions work. It's not just serving investors or just serving those raising capital, or it'd be far less valuable to both sides of the equation. So here's a picture of our team. We've had over 1,000 ultra wealthy families and their family offices speak on stage at our events over the last 13 years. We've helped create over 100 family offices during that time. And I'll go through some stats a little bit later, but just during this year, which has been an interesting year already in 2020 here, if you're listening to this live, obviously, is that in the first quarter, we've been able to bring on hundreds of new investor leads and signed 86 different investor contracts since January 20th, is how much progress we've been able to make. And I want to share with you how we're making that progress, because that is how we come up with all the ideas to share with you, and how to make the investor club more powerful is to share what we're learning in real time. So the Family Office Club includes access to many different resources. The top 6 most valuable ones we feel like are the virtual investor discussion panels, where we capture the strategies, the investor mandates of the investors. We also have their structures preferred, their fees preferred, geographical preferences recorded in there. We do those in a discussion panel format. We also every day record investor mandate interviews. We recorded 4 of those already this week, and it's Tuesday. And we are basically keeping those interviews very short to 7 minutes, and just getting across what is their mandate, what do they want more than anything else to invest in, and then what's their number one piece of advice for investing for anyone listening. We then have 130 to 150 proven capital raising strategies, and we're cataloging those and always adding to them, and I'll get to where those are later. We have 42 different niche investor databases like fintech, healthcare, cannabis, single family offices, angel investors, wealth management firms, et cetera. I've been in the database business through familyofficedatabases.com for over a decade. We also have pitch deck coaching and deal analysis that's free with membership. Once every 3 months, we look at all of your information and give you 20 points of feedback. For well-established clients that are raising 10, 20 million a year, we have pitchdex.com as an investor relations agency that works on a retainer basis with people. And then we have over 2,000 investors registered in the Family Office Club that you can get access to. We have on the homepage, you've probably seen all the different types of mandates we have. If you're following along visually, you can see images of that here. I'm not going to read that off to you, so you can see that on the homepage of familyoffices.com. We have the #1 podcast in the industry, which is not hard because there's only a half dozen of them, but it's called the Family Office Podcast. And we're updating that at least once every day of the week, sometimes 2 times a week. And we have about 40,000 people a month downloading that podcast. Over the last 13 years, what we've been paying attention to, if you were dialed in last week on the webinar with us, is what is everyone doing who's raising a lot of capital? What's everyone doing who is struggling? And how do you avoid doing what they're doing? Also, what are almost all investors asking for that nobody is listening to and no one's really addressing on the capital raising side? If every time we ask investors a certain question, they're all asking for a certain thing because no one's giving it to them, and that's where you're going to get the most mileage in the least amount of time. And that's where we want to shine a light on through our investor club for you to use your time more effectively. Investors don't want you wasting their time. You don't want to be wasting your time. And the more effective you can be for every hour of energy you invest, of course, you want an ROI on your money invested in your business, but your time just as much, if not more so, then that's really what we're here to help shine a light on. Before we jump into this, we have a quick poll I want to do for the people that are on this call. We'll just talk about the amount of capital you've raised and how we could be helping you. I'm going to send that out here and see if that comes up maybe in your chat window, but I'm going to keep on moving through content as you complete that. Maybe it just takes 30 seconds to complete that. So the 7 strategies to leverage our investor club: 1, investor leads; 2, strong positioning and auditing your capital raising materials; 3, investment structure strategies; 4, doubling your quality deal flow; 5, how to use databases of investors, ours or anyone else's, including your own; 6, investor funnel construction; and 7, 150 capital raising strategies. With each of these things, I'm going to provide you some insights you can use whether you become a member or not, but also show you top mistakes and ways to leverage our platform to get more progress in each of these 7 areas. So first off, investor leads. What we found is that the #1 mistake, the #1 most common mistake of people new to raising capital is thinking it's all about investor leads. If they could just get an introduction to 3 families, we're in the family office space, can you show me the 6 people that went self-storage or the 10 that went fintech, et cetera? They think that will solve all their problems, and it's so far from the truth. We've had probably 40 or 50 people on stage just at our Capital Con events the last 3 years who have all raised $100 million plus. And the best of the best in the world go to 150 to 250 investors to find those 12 to get their deal done. So it's a numbers game. So anyone introducing you even to 30 investors, that's not really going to move the needle and help you enormously compared to giving you strategies, compared to giving you ways to generate new investor leads. So when you think about investor leads, oh yeah, I want to get some of those might be something that you think about, but really it's how you could create a perpetual system that systematically attract leads to you, to get more leads all of the time and do a better job once those leads actually get into a meeting with you. And that's part of what we can help with. We've been able to attract well over 2,000 investors to register with us. We have 1 or 2 new investor recordings every day of their investor mandate interviews, and we're uploading those to the portal. We've had 292 new investor leads come in 2020 already. It's almost 300 new investor leads, and 81 of those have signed our investor agreements and signed up from the start of the year until now. And we're getting signups each week through the virus crisis as well. So you can learn from what we're doing there, is my point. Last year, we referred 130 million of assets over to some of our wealth partners, and we've been able to close a few investments with some of our investors this year. And what's most fun about running the Family Office Club is I get to learn from my investor clients, which are the winners in the game of capitalism, and then use those lessons to grow the Family Office Club, but also share them with you in real time, and also share what's working very well for some of our members, but the rest of you are not doing at all. And I want to keep on bringing up those types of points throughout the presentation today. When we're learning new things, we have no reason not to share it with you. You're not running a competitive family office club type organization. So it's to our benefit to just be transparently sharing things as we're learning them so that you can learn faster, you get more of an ROI out of your membership, and then you'll want to be aligned with us for the long term to do real business together. Whether you are a VIP member or a monthly member, or work together in some larger way down the road, like through a retainer agreement through pitchdex.com or something else, whatever starting point you have with our business, it's probably not the biggest way that we could be working together. And so our motivation is to grow the respect for what we've learned, get to know you, and respect for your expertise is, and just see where there is that interconnection through one of our divisions where we could be working together on a bigger level that's not just a basic membership in the family office club, even if that means, you know, it takes 4 to 7 years being a member to figure that out. That's our intention, is to add the value for the long term. We're negotiating one investment deal with one of our investors now with a group in Arizona. They've been on our email list for 12 years. So I hope that it doesn't take that long for you to flow through our funnel to get something done with us. But with that group, they've been on our email list. They reached out 2 months ago, and they've got a valuable asset that some of our investors want access to. All right, one thing I wanted to share is that with a lot of people I see who write books and teach things, they might not actually be doing it. With us, we're doing all these things in real time, so you can watch what we do as much as what we say. So when we say you need to niche adopt what you're doing to a marketplace to attract them, or you need to have a structure that's superior because it's performance only or has some sort of unique structure that addresses the needs of investors, we're not just telling you that last week on that live webinar. If you're one of the 1,000 people on that webinar, it's because that's what we know actually works. And if you want to see that in real time, you can go to privateequity.com, which is only for investors. It's not for anyone raising capital. So even if you fill it out to raise capital, it's not going to do anything for you. If you are an investor, it takes maybe 5 minutes to complete, and then you can become an investor client of ours. That's removing friction from the process. It has a performance-only fee structure to show them investments. And I think that's just one example of us taking what we were talking about on the structures webinar, and we're doing it in real time. So you know that our advice is genuine because you can double check it against our actions in the real world. And I also want to point out one thing that causes some confusion. We're not investment bankers, and we're not your placement agent. We're not going to raise capital for you for a percentage success fee. It doesn't matter how generous that fee is. We just never do that. We can help through our agency or through membership or through our databases, and would like you to get to know us in that way. We pick out the deals that we think are the best fit for our 86 investors, and then help make those direct connections, and then you can make connections with our 2,000 plus investors in the community. One big thing here is that we don't want to be looked at as giving you a couple of fish. We want to teach you how to fish, how to build a fishing pole, how to get other people to fish for you, how to build a fishing net. We think that's unique value. There's 1,000 people out there, you know, just no disrespect to placement agents that are on this webinar, but there's 1,000 placement agents out there, and we see very few people offering full day intensive workshops on capital raising. We find very few investor clubs that allow you to see investors being recorded all the time and see all of their mandates and be able to connect with them in the way we do. So we're just trying to play in the white space, just like we recommend you do with how you raise capital. Don't do what everyone else is doing, or at best, you're just going to be a commodity and get slow progress, slow feedback, and not a lot of success in our experience. The other thing I wanted to mention related to investor leads is you'll see a common theme through all of our workshops and today's content, that if you can get a design in place for your business, for your investment firm, for your services, that is consistently and systematically attracting leads to you, they're pre-qualified to invest in what you do, like say going to law firm partners to invest in a litigation funding offering or something of that nature, then that is going to be what's going to be most effective. And so you can see some of our niche resources at familyofficedatabases.com. We have 42 niche investor databases there. And we're going to talk in about 20 minutes on how not to use such a database and how to use such a database, but that's related to how we can help on investor leads as well, are those niche databases. So strong positioning is connected to investor lead gen. This is the second idea for today on the webinar. And I want to list off some of the ways we can help you get positioned very strongly in a second here, but the reason why you want to do this is that if you don't, and you just go to the marketplace and you're not strongly positioned, it's going to be like going to a lake trying to catch a fish instead of being a grizzly bear at the waterfall, fish jumping in your mouth. Many people have heard me say that before, but then they haven't taken that advice and implemented a very strong position that's bringing them those qualified leads over and over again. So I would encourage you to log into the membership, watch the Investor Influence Workshop. It's a 5.5-hour workshop where I'm talking at this speed, going through slides and providing you 30 different strategies and insights on how we've positioned ourselves, how others in our investor club position themselves, and why it works psychologically. And if you understand those principles, then anything you do to implement the ideas will be stronger than it would have been without understanding that background and the authority positioning and reciprocation and commitment, consistency, and a bunch of Cialdini related influence principles, because you'll be able to implement it in a way that's true to who you are and genuine to who you are as a person. So I encourage you to watch Investor Influence as well as Capital Raising Catalyst, which is another one of our workshops. Those are the two that are going to help you the most with strong positioning. And part of being positioned well is knowing your competitors very well and knowing what they're all doing, who is growing the fastest and what are they doing right, and then finding the best practices of each of them and adopting them and making those practices your own in your own genuine way that's authentic, not copy pasting them, but kind of stealing the best of all the best competitors and morphing it into your own iteration in the industry. And then if you combine that competitor knowledge approach with getting to know one investor set and focusing everything on one investor set and not going after 3 to 5 types of investors, but a very niche type of investor, then you can customize and know what their headaches are and know what their challenges are and know what they're most likely frustrated with and what they're most likely seeking. And if you combine that with reflecting upon what you're strongest at as a team and strongest at as an investment firm, then it's going to make everything you do much more powerful. What we've found is that if you do not do those 3 things, you're going to innovate in a way that no one cares about or drives away investors. If you don't focus on an investor type, you're not going to resonate with anybody. You can't say the same things you would say to a busy doctor who's constantly in the ER as you would to maybe a high net worth business owner who's worth 1/5 as much, or to an ultra wealthy person who runs a family office. You can't. And if you think you can, then you're just not being as effective as you could be. So your material should all be dialed into what your competitors are doing, what they're missing, where is the gap, how are they not being niche positioned to be as strong as you could be, because the big lumbering giants, the $1 billion plus groups can't niche position like you can. And then figure out what investors want, what they're complaining about, how you can solve that within your niche with structures, strategies, positioning, offerings, types of deal flow, how you work with them, and how you de-risk things perhaps, and then combine that with your strengths. And that positioning combination is what can make you very strong in the marketplace and get far more progress than many other people. And that's what my business is built on. That's why I share these ideas, because I know that they work and I'm confident that they'll work for most of you here. The most expensive mistake related to strong positioning is just writing it off completely. Most people just say, oh, I just want to get my next few leads, or just tell me where to get more investor leads, or can you refer me some? Or people are constantly asking if they can pay for us to get them some custom leads. And it's an expensive mistake, because then even when you get the lead, your materials don't make sense to them. They're not dialed into them. They're not the right quality. The data room doesn't have the right information in it, et cetera. So I'd really encourage you, especially if you've heard this once or twice from me before, to really take time if you're listening to this live while we're on quarantine, to really meditate on this and spend a day of your life just nailing the positioning with your team, your co-founders, your spouse, whoever's helping you and starting or growing your organization to the next level, and really get this right. All right, the next thing we're going to be talking about here is investment structure strategies. This is something that we can help with. It's related to being part of our investor club or any other investor club. And that is that investors will constantly complain about things that are not well aligned, where someone has fake skin in the game, where the fees are too high, where they feel like, well, I'm not going to get any profits out of this thing for a long time. My money is illiquid for too long. Well, if you have the right investment structure, you can make it so their money is not illiquid too long. Or you can figure out, oh, my investors like income, because you're focused on one type of investor and you're listening to them. Hopefully as you're only meeting with that type of investor, you're going to learn very quickly. And if they're all requesting income, you could structure something that gives them the income they need, gives them the liquidity they need faster, but also leaves you with more equity in your great deals at the end of the day. So your net worth is growing faster and you're raising capital faster. That's a win-win for everyone involved. And so having these multiple structures in your back pocket is what's going to allow you to maneuver through conversations and react fluidly when someone comes and says, well, we don't like that structure. Could you do anything that gives us more liquidity, or something that's debt or income or preferred income, et cetera? And those are all ways to keep the momentum going, or just start having momentum with someone who otherwise would say, well, I've seen 500 PE firms like this, or I've talked to 200 different tech companies and they're all looking the same. If you have a fresh approach, then it might get their attention. And many people say, oh, well, is it really that important? I mean, people raise capital all the time with just an average structure. But, my attitude is that capital raising is never easy. It's always a challenge. And so if it's not, you wouldn't be here on this webinar. And so why not have that advantage? Why not have it sweating for you? Just like when we talked about positioning on the last slide, why not have a brand that communicates what you do, why someone should work with you, the benefits of investing with you, et cetera, or whatever your unique kind of positioning is? Why not communicate that right in the brand name, or at least in the one-liner, if not in the brand name? Why hide that? You could have it sweating for you at every interaction, or you can have it dragging you down or distracting people and causing confusion. That's why we chose the name Doctor's Family Office for some of our work with the medical community. And that's why we chose Centimillionaire Advisors for our work with the ultra wealthy and setting up their family offices, because we're advising 100 million plus net worth families. It's very clear, what we do, and it also positions us as no one else is doing that. Another example of that is our book, Centimillionaire Strategies. It's the first book ever written for people worth $100 million or more. So if you're in that camp, we're positioned to be one of the top advisors to help you grow your portfolio and protect your portfolio. So I would just encourage you to spend time on structures. You can learn about this through the Family Office Club by hearing from our 40 to 50 Capital Con speakers that have all raised 100 million or more that have spoken at our recorded event called Capital Con the last 3 to 4 years. And you'll hear about them talking about different structures that they use as well as strategies. You can also hear from our hundreds of investors we have recorded each year what structures they prefer, what are their worries, what's their number one piece of advice they've learned the hard way to other investors. And you'll be able to hear some themes through that are related to your niche about what type of structure you'll want to be using. And in short, we're going to be able to transform how you structure your deals and what optionality you have in doing so. And that's going to result in you getting more capital raised. And I think this is an area we haven't talked about enough before. If you weren't on the webinar last week, make sure you get access to that through my team as a follow-up here. You can just email us at clients, it's clients plural, at familyoffices.com. And the familyoffices.com part is plural as well. So clients at familyoffices.com, and we'll get you access to that structures webinar. We talk about this not for 5 minutes, but for 90 minutes, and you can get more of a deep dive on structure. All right, the next topic here is doubling your quality deal flow. Before you lose interest in this, because I know it's the least interesting of the 7, I know that the number one mistake here is everyone dismisses this completely in their capital raising plans. Everyone says, oh no, we're fine on deal flow. We got more deals. We can't even see straight. We have so many deals. Well, I guarantee you that for 99% of people on the webinar that we see way more deal flow than you. And so our 0.1% of deal flow is going to be just as good as yours, or a lot better, or maybe you have much better deal flow than us. But we spend $4 million a year running our investor club. So we have excellent deal flow. We have capitalraising.com, familyoffices.com, all the media assets producing good deal flow. And so I know we have excellent deal flow, and I've seen firsthand how it attracts investors and how important it is to the investors, but everybody writes it off. And I think it's a huge mistake. It's so closely connected to your ability to raise capital that many people don't reflect on the fact of, okay, well, I thought I had a really good deal, but honestly, when I compare it to someone who sees 5,000 deals a year versus 500, maybe it looks a bit average. Maybe it looks like not a good deal at all. Maybe it looks risky under the current structure. Maybe the team isn't presenting themselves in the most credible way, and there's no timeline of their track record. Maybe there's no bios on the team. Maybe they're missing some key visual components in their teaser, et cetera. And so it's just not being received well compared to how other things are going to be received by other investors who also see a lot of deal flow. So the point here is that whatever deal flow you have, you could have much, much better. The same is true for me. I hope that 3 years from now, I'm getting triple the deal flow I am now, and I'm seeing 3 times or 5 times as many really good deals than I am right now. And that definition of a really good deal is going to change. What you call an anomaly deal, like a statistical anomaly, should always be changing and being upgraded. So if you're not constantly working on that, you're doing yourself a disservice. And the reasons why is that if you improve your deal flow greatly, you'll get word of mouth referrals before someone's even invested, because the deal is so interesting and so appealing that people want to get access to it. 2 examples of this to make it clear is a life settlement investment we're talking about with some of our investors. we're not salespeople for it, but it's one of the strategies we're showing our registered investors through privateequity.com and through Centimillionaire Advisors, because it's not correlated to the stock market or real estate. And so there's 100 different providers of a life settlement strategy, but that's an example of something where if you have a great quality idea plus a great quality investment manager there, that you can make a lot of progress. Another example is a chain of dental clinics that we're working with. And we've seen that a dental business can be, a decent quality investment. And it's something that family offices and especially doctors and dentists want to get access to for investment. So being able to source high quality versions of those types of deals can and has gotten us introductions to other investors before someone's even put their money to work in it. So I just would encourage you not to dismiss this and constantly improve your deal flow. And the Family Office Club can be an excellent place to double the amount of deal flow you get. We can equip you with the deal flow sourcing strategies. If you're ever running short on those, you can email us. You can submit your capital raising audit through the member portal and say, hey, I want more advice on how to get excellent deal flow. And we can give you a dozen different ways to be doing so. The other reason to be keeping this in mind is that your actual results will be much better, which means your track record will be better, which means it'll be easier to raise capital 4 to 7 years from now. The other obvious reason is just it's being a good steward to your investors' capital, to your own capital. It's also protecting your own time. Why work so hard on raising capital if your deal flow is only mediocre? You need to be always growing your deal flow, always growing your capital raising abilities. And by always expanding those capabilities, you're going to get better results exponentially as those things compound over time. So you really owe it to yourself and everyone you're working with to be improving your deal flow. We don't have time to explain all the images I'm showing visually here, but in our workshop called Private Investor Advantage, we go over for 5.5 hours all the things I've learned while working with private investors, angel investors, family offices over the last 13 years, and sharing all different strategies on how to engage them, attract them, how I help them set up family offices and what I teach them about that process and help them implement, but also how I help them define their strike zone on what to invest in, what not to, how we structure their direct investments into operating companies and real estate versus the public markets, and how it's completely different than most people do it. I've never seen someone document that type of an approach, but it's how all of the $100 million plus families really that I know are structuring their portfolios, and it's completely different than how most mass affluent 5 and 10 million net worth individuals are managing their wealth. So by being a member of the Family Office Club, we're going to be able to help you with this greatly. I know you probably didn't come into this caring about it. I hope you care at least a little bit about it now, because people dismiss it and it's a massive mistake. And we want to kind of point out some of those blind spots, as you move through your membership in the Family Office Club, with the goal that after 18 months, we've kind of transformed how you raise capital and how you work with investors. All right, our next topic here is how to use databases of investors. This is an area that's often misunderstood. Some people have a feeling that the database is the magic bullet. That's kind of bad for us being in the business of selling investor databases to say, no, it's not the magic bullet you're looking for. It is a helpful tool, and everyone should have their own database of investors. They should see what types of investor databases are appropriate for them. And what we've found, even though we started with one investor database, is that now that we have 42 different niche investor databases on private equity, hedge funds, cannabis, fintech, impact investors, real estate investors, corporate venture capital, angel investors, single family offices. I'm not going to read off all 42, but the point is what database is appropriate for you is going to be different than the next person. And we can help with the use of the database. What we found is everyone else selling the database either doesn't even have pictures of their team on their website because they're running their business out of their mother-in-law's basement or a fly-by-night garage ram business, or they're not really in the business of family offices. They're not setting up family offices. They don't work with them. They're not helping them invest, or they're a brand new business and a tiny operation. So just be careful with it. And without the knowledge of how to use them, it's really not that useful. Otherwise, we would just build our own database, raise $10 billion a year, and I'd be just as rich as one of the top Forbes 100, and be a billionaire myself, and not have to be jumping on this webinar here on a Tuesday afternoon, which I don't mind doing. But let's be honest, if it was as easy as just the database solves all your problems, then the people with the data would rule the world, and that's not how it works. You need the strategies. It's one of 30 different things you need to have your ducks in a row to be able to make good progress out there and meet with investors and have a healthy investor relations program that's really holistic in nature and functional in many different ways and credible at the end of the day. So if you want to go to familyofficedatabases.com as a follow-up item after this, or while we're talking here, you can see the 42 niche databases. Daphne on my team runs that division. If you're just listening along audio-wise, the phone number here is on the screen. It's 305-677-3327, and it's familyofficedatabases.com. Some of the top mistakes here is to think, oh, well, let me just get all the databases, send them one big generic email, and then X% will reply, and we'll follow up with those, and we'll close a percentage. For a niche positioning group, a niche position database in a niche offering that's well thought through, and you've thought through that trifecta of your competitors, your investors, and your own strengths and weaknesses, and you're positioned just right to the right niche database, you might get a decent response sending an email out. But the best way to do it is to build a genuine relationship. And every time that you're looking to reach out to someone, to check out their website, check out their bio, check out their background. Are they in a place where maybe right now during the virus, you're not able to travel, but you've got a couple assets there, you've got family in that region, you know, you will be traveling there for Christmas or in September, et cetera, and figure out how to build that genuine relationship, ideally by adding value first, but at the very least by sending a one-liner of positioning yourself that's relevant to who they are. So you can explain why you're relevant on planet Earth in a sentence and do it in a way that's very engaging by adding value to them first through a free webinar or a white paper or an insight or a connection to someone or some helpful resource or a newsletter. You can also use it for direct mail, which no one wants to do. It's much easier just to hit send and email 400 people. But no one wants to do direct mail, and that's why it's really valuable. We've had investors at our events repeatedly say they all get, even the non-investors in the room who get far less emails than the investors, all get hundreds of emails a day, at least 100, if not 300 emails a day. And so if that is true, but then I have people raise their hand and say, well, who here gets more than 2 pieces of thought leadership that actually add value to you in direct mail for the whole month, not per day? Not a single hand goes up in a room of 200 people. I asked in front of 840 people at our annual event at the Ritz-Carlton. It's called the Family Office Super Summit. And no one raised their hand. No one's getting thought leadership even more than 2 times a month that just adds value. Everyone's just sending out the lazy emails, just hoping a percentage will reply. But they know that's low engagement on your part. It's low care on your part. It's commodity. And it's just running with the herd. And like Dan Kennedy has always said, if you're not sure what to do, just do the opposite of everyone else. So direct mail is something that with a couple of our retainer clients on pitchdex.com, we're going to be helping them rolling out like direct mail campaigns where they're sending out printed newsletters or sending out one-pager teasers, et cetera, maybe with our Family Office Monthly newsletter, which we're sending out in print. But also, you know, buying the niche database and using that for direct mail is something I tell you that none of your competitors are doing, at least not in a way where you're adding value to them first. Also, I want to point out that there's a time dimension. You know, it's like those raising capital live in a different time world and a time zone than people who are investors. So the investors are resource constrained. So many people are emailing them and requesting their time every day. It's not physically possible to email everyone back. You can't call everybody back, you know, at the expense of maybe showing somebody's phone number here on the screen. I mean, you see, I've got like a series of voicemails here. I don't even have time some days to listen to all the new voicemails that come in. My executive assistant, Genevieve, is like a superstar, but investors face that challenge all the time. And so if you're not clear on what you're doing and you don't have strategies to get their attention and you don't know how to follow up, when to follow up, what to say, what visuals to have in your materials, how to put your unique value add process into a 5-step diagram, how to position yourself using influence strategies, then you're going to be dead in the water and you're not going to get results, and it's going to be frustrating and it's going to be hard. And it's going to be hard no matter what you do, but we can make it less hard for sure. We can help you go from 30 miles per hour to 50, or from 10 miles per hour to 30 miles per hour. And we have many examples of that. We've got one company that there's a video on the homepage of familyoffices.com right above the registration form from someone who says, you know, I'd raised $4 million and I joined the Family Office Club, learned strategies, and we've raised $40 million since then. And they've also engaged us, you know, through our investor relations agency at the same time. We have another group that I just joined the board of maybe 12 days ago now, and they had never heard of family offices before. They came and participated in the Family Office Club, learned about the ultra wealthy, learned about family offices. And while this isn't typical, you know, the story is that they basically went from not having any investors to having just 3 investors, but now they manage $250 million in assets. And they said, well, Richard, you helped us get us here. Now help us get to $1 billion in assets. And I said, yeah, I'm happy to. And, we're have an advisory board position with them now. And so that's an example of the strategies needing to be combined with a family office database, whether you get a database, from us or build your own. We've got a 4-person full-time team. All they do is help us update these 42 databases constantly, because it's the same day that you create them, someone's changing jobs or someone got bought out. Besides the time difference of people not having enough time to look at things, you have to be very concise and do things that others are not. There is the necessity to build relationships before pitching. You can see this oftentimes when people meet in person, over a cup of coffee or at a networking event, but also it happens via email where people say, well, look at this deal. It's got a great IRR. And honestly, the investors, they don't care about your deal. They don't care about the IRR. They'd rather invest in someone they trust and is high conviction. They understand your strategy. They understand how you add value. They can sleep at night knowing they're working with a high integrity team that's going to do the right thing when they're not looking, not going to, sneak some things by and just do right by you at every turn. That's who they want to work with, not the person with the highest returns. And God forbid you say there's no risk at all, because that just shows you don't respect risk, and you don't respect their money at the end of the day. But you have to really build those roads of the relationship before you expect to make a ton of traction on the investment. That's why it's important to add value first. That's why it's important to have people know that you exist on planet Earth and that you're a resource to them, for them as an investor, whether they want to learn more about mineral rights and oil and gas, or learn more about litigation financing or stem cells, or how to invest in tech investments, et cetera. I would encourage everyone to figure out the compliant, friendly way to use text messaging, video, and direct mail, because pretty much nobody is, and we're going to talk about that in a few minutes. But I find that if you can focus more energy there than you are now, you're going to be ahead of the competition, who's just sending out emails that just get archived to people's thumbs as they walk to the elevator or walk down the hallway, and they just don't have time to get all of those messages and even read them, much less respond. And the longer your message is, the less likely it is you're going to have anybody read that and get any type of response. The same with your materials. The most important message here for those of you new to how to use a database is just that it's not the magic bullet. It's something that everyone should have if you're raising capital, but you need to combine it with the strategies, combine it with other things that we have. It's a theme you'll see as you get to know us if you're new to our brand, is that we're not just a conference company. We're not just providing you a database. We're not just providing you investor mandates through our investor club. And we're not just helping investors source the best deals. It's by doing those multiple things that everything is more effective as a system, as kind of an organism. Because when you just do one thing, you're in a silo. You don't learn as fast. You don't get the insights. And you don't see the interconnectedness of where the magic actually happens, because it's never about one thing. It's never about the one source of deal flow or the one strategy that's always going to work. It's about constantly learning and innovating and iterating. And I know we have some questions that are starting to pile up there, but I want to try to get through as much of this content in the next 10 minutes or so as we can, so I can then go to questions, and I'll try to start at the top. So the next benefit here is investor funnel construction. So an investor funnel is something that you set up to systematically, routinely attract investors to you, and make it so that when they get into your funnel, meaning they've already now been attracted to you, you can move them down the path to actually becoming an investor more fluidly and more often. So when you look at the ugliest of the three here on the visuals, when you look at the funnels, there's one that starts with blue at the top and green at the bottom. And at the bottom, it says capital. And if you're not following along visually, because you're listening to this just audio-wise, it's a visual of a funnel. On the top, it says articles, interviews, podcasts, and then reports and white papers and surveys. The next layer of the funnel, the next one is a book publishing, book published. The next layer is giving talks publicly. The next is meeting in person, and the next is raising capital. This funnel, like all funnels, is larger at the top, smaller at the bottom, because less people invest compared to someone reading an article or a blog post. That's pretty logical, but what's interesting is that none of your competitors have this, especially none of them that are under $1 billion in assets. If you think a competitor has it, then you probably just need to go niche within a niche and not compete head to head with them. And that's the whole point of creating this. You want the next person who tries to enter your sandbox to see your funnel and say, maybe I don't want to compete against Sarah here within the self-storage niche. Seems like she's got this on lockdown when it comes to San Diego self-storage. Let's talk about commercial real estate in Southern California and have that be our positioning. And so the goal here is that you have maybe, say, 500 people a year looking at your articles and blog posts, maybe 100 a year download your white papers. Maybe you don't have time to write a book right now. You give 5 talks a year, record those, maybe share them on your website or via email. And all of that helps you get 20 extra meetings versus the 30 additional investor meetings you maybe were already going to get. But you get extra investor meetings, and then some of those lead to raising capital. The important point here I don't want you to miss is that some people will read an article and then go to having a meeting with you, and then they'll invest. Some people will go through the whole funnel, every single step, and then they'll invest. Some will go through the whole funnel multiple times for 12 years and never do anything. Some will just hear about you because others have gone through the funnel and go straight to the meeting, and you'll get a referral. Some people will not hear about any of this, and you'll just reach out to them cold, and your email is received as more credible because you have this funnel. You can share the white paper first. You can share a video. You can share a podcast episode you did or a radio interview you did, and that's going to help you get the meeting because you have the funnel in place. If all of that fails and you forget to use this to get a meeting, it doesn't get you any meetings, it just completely falls on its face, as long as you have targeted the right investor set and your own niche within a niche positioning and you implement this funnel, then what's going to happen is every meeting you have, you're going to be more articulate, more well-spoken, have more drip follow-up assets. You're going to have more helpful resources that make you look like an expert, not somebody who's just trying to push on them to sell something without being helpful in the process. You're going to get more word of mouth, and it's going to be easier for them to win over their team, their family member, their spouse, their partner, whoever needs to agree with them to be able to move forward with the investment. It could be their analyst, for example. And so the very worst case scenario of putting this together is that every meeting you go to, you're more persuasive, more articulate, and you've got better follow-up. You really have nothing to lose by doing this, and nobody is doing it. This is marketing 101 if you're in the marketing industry, but I bet out of everyone on the webinar here, maybe 10 of you are from the marketing industry. And so no one knows to do this. No one knows how to do it. They don't think to do it. And it helps you generate leads, investor leads. And we can help you put this in place in a dozen different ways. We can help you with the database to help with getting some people on the top of the funnel. We can help you with brainstorming because every quarter we'll review all your materials and give you 20 bullet points of feedback on what we would do differently to position yourself better, to build out your funnel, unique opportunities for your funnel, an investor set we would target if we were you. If you're stuck on some piece of the funnel, you let us know. We'll tell you how to get past that. We'll tell you how I figured out how to write a book with just 2 business days of my time versus spending the normal, it took me 9 to 10 months of spending many days, probably 15 business days, full business days to write my first book. Well, now I've done it 13 times. I can show you how to not do it the painful way. And we share those strategies within our workshops when you log into the member portal. So the investor funnel, if you got nothing else for membership and all you did was say, well, I got to join the Family Office Club because I want to build out my investor funnel, and that's all you did for 18 months is build out the investor funnel, you would have a massive return on your time and energy invested. If you ignored everything else we do and didn't watch a single investor mandate and get a single investor lead, didn't use the databases, and you just worked on building this funnel, it would be a massive return on your membership invested. A lot of people in the real estate and investment space have these coaching programs, and maybe I'll be smart enough 2 years from now to have one this expensive that they charge $40,000 a year just for coaching ideas. They're not implementing anything. They're not making introductions, not giving you exposure to investors, not giving you exposure to a membership and investor club. They're not giving you special access on anything. They're giving you just ideas, and they're charging $40,000 a year for those ideas. And I think you can get that level of quality of ideas from the Family Office Club. And during the virus crisis, our membership is $1,450, at least for right now. And then you're grandfathered into that going forward for when our live events start. And we'll be raising that annual membership up again when the live events start, especially if the size of those events are limited. We're going to make it really premium. And, the membership options will continually probably get more premium over time. But if you come in to the membership, you can pay monthly at $299 a month or an annual at $1,450, or you can do a VIP, which includes several investor databases, plus it includes the membership benefits, which we'll go into in a couple slides. I just want to stress how powerful the investor funnel can be. My whole business is based on it. It's because of this funnel idea that when I started my business in 2007, we hit 7 figures in revenue in our 3rd year in business. And it was really learning from coaches like Evan Pagan and John Carlton and Joe Polish, which I just got off a Zoom call with, and Dean Jackson and Dan Kennedy, and Brian Tracy are all mentors of mine, and Frank Kern, all mentors of mine that helped me figure out how to build an investor funnel and how to adapt that to the investment world. So I've done that interpretation for you. And there is no other expert that I know of, and correct me if I'm wrong, so I stop saying something that's just not factually true, but I don't know of any other expert globally that helps you build an investor funnel. I don't know anyone else who shares nearly as much as we do on investor relations and capital raising. So we genuinely want you to get a ton of value out of this, because then you're going to be a member for 5 years instead of 1. Then you're going to upgrade and be an investor relations retainer client through pitchdex.com. You're going to buy a database through familyofficedatabases.com. You're going to put me on your, advisory board one day, a decade from now, or something like that. It's in our interest. You get a ton of value out of your membership. So we can, I also want to point out though, some of you are early stage and you're raising your first $1 million, and the membership is the only thing you can afford. I wouldn't be put off by that, because everything that we're learning through the 81 clients that we've now served through the investor relations agency, pitchdex.com, all those lessons that we're learning through their implementation of their investor relation materials, plus our own everyday iterating, we push down and we share it through membership. We don't hold those strategies back, because it's by giving them away that people realize that there's value. And if they implement it, then they'll get an ROI on that implementation. And then it's worth coming and implementing the next idea. So if some of this sounds like, well, we're raising our first $1 million or haven't even started raising capital, you're not in the wrong place. You're in a great place, because if you design things from the ground up to be more effective, it's going to be excellent. Lots of people hear our advice and they say one of two things. One, oh, well, we already established our brand. We printed our business cards for $32. We registered our $8 GoDaddy domain name. Set up our email address. It's too much of a hassle to change our brand name to have it be effective. But I know multiple billion-dollar plus firms that rebrand to be more effective. But I hear a lot of people have this excuse of like, oh, well, I've been using this brand for 2 years, or, this positioning, and they don't want to reposition themselves to be stronger. And I think that's a costly mistake. We also hear the mistake of people looking at something like this and thinking, oh, well, that's not how it's done in our business. That's not how we've raised capital the last 30 years. Or, well, this is not, how our industry works. We're about handshakes and meeting in person. And, this digital funnel idea doesn't really sound like us at all. We're not thought leaders. Well, no one's born a thought leader, and no one's going to ever anoint you a book author. You just have to have the mindset of adding genuine value and authentically sharing what you're learning along the way. And your investors will appreciate that if you have that intention. And so what I say to those people that say, oh, that's not how we do it, it's like, well, it's going to be how you have to do it if you want to keep on being effective, or you're going to be like Blockbuster and go out of business. You're going to be like Joann Fabrics, which my mom said she went to the other day. I didn't even know they still existed. I doubt they will after this virus crisis. The businesses just get outdated because they're not as effective as building a funnel where the investor leads can come towards you using digital assets, thought leadership assets, such as podcast and direct mail, text messaging, et cetera. The point is that no one's going to go through your digital funnel and then say, yeah, I'll invest $800,000 in your deal. The point is to have them go through your funnel so you get more phone calls, more meetings, more text messages, and then you get more capital raised. It's not replacing building trust. We know that's at the center of raising capital. We flogged to death the 3 trust curves idea on our other webinars and our other workshops. So it's really about building the funnel on top of what you're already doing. So what you're doing is more effective instead of reaching out cold to people who don't know who you are and don't really feel like replying. If you're watching visually, there's a second funnel here that just shows basically another way to look at this is you're moving people from cold to hot. They don't know you at all. Now it's easier to get to know you on the top of the funnel. They get to know you better, and then they become an investor, hopefully, or you just keep in touch to trade deal flow, et cetera. I think that's relatively obvious about what this funnel is doing, but I wanted to point that out. Also, I want to point out top of the funnel, it's not much engagement required on their part to read an article, to read a book, or watch a live webinar like this for 80 minutes. That takes a lot more engagement of your time. It took a chunk of your day to do, and you wouldn't do it unless you're somewhat serious about joining the Family Office Club, because otherwise you could invest your time doing other things. So it shows a level of qualification, just like coming to our office to meet in person, with Andres or Jonathan or Daphne or Jennifer on my team, to talk about membership, then that's something that shows you're more serious. And so at the top of the funnel, you have more people flowing through it, and they get more and more serious the more refined and in-depth the assets are. and it shows you're more serious. It shows that you are an expert in the space and you are a thought leader and one of the most helpful people in your niche. The third funnel you'll see here that's turned to the side is really just showing that on the front of the funnel is all the lead gen type stuff: social media, email, blogs, podcasts, website, pay-per-click, other types of advertising that will get you into the funnel. And then through the funnel, you're building credibility, and then sales or new investor clients come out the other end. That's the other way to look at investor funnels. All right, so 150 capital raising strategies is another thing you can get from the Family Office Club and benefit from. You know, we have, I believe, the #1 source of capital raising strategies globally. I don't think anyone else shares as many strategies or as much content as we do. And if you are a current member and you need help navigating the membership portal, make sure you've already done your walkthrough with Jennifer. And if you become a member today, make sure you do that walkthrough with Jennifer so you can leverage all those capital raising resources. A ton of people miss the 35 hours of recorded webinars we have, the workshops they miss, the capital raising audits quarterly they miss, etc. We have our investor influence workshop, which is one of my favorites. My whole business is based on investor influence and persuasion strategies and positioning. We have our investment pitch prep workshop. Let's say you can't afford a $2,500 a month to $10,000 a month retainer to engage us through our investor relations agency. Well, you can benefit from almost everything we've learned. We're not going to implement it for you, but we'll tell you what to put, what visuals to put into your deck, how to create the timeline, how to create the right type of logo and one-liner, and what exercises you need to go through during the workshop so that you can come out the other side and have your materials drastically improved. We also have our Capital Raising Catalyst program, which goes over positioning, the fundamentals of capital raising. If you're just getting started, I would do that workshop first before anything else, because they'll have you complete a cheat sheet on there. They'll give you kind of a game plan for moving forward with raising capital. We also have our Private Investor Advantage workshop, which is another 5.5-hour workshop, just like Capital Raising Catalyst, Investor Influence, Investment Pitch Prep, Investor Relations Upgrade. These are all 5.5-hour workshops that give you 30 strategies each on how to raise capital. We don't have nearly enough time to talk about anything more than 3 or 4 of the strategies on this 80-minute webinar, but there is a ton of content in there. And I doubt a single one over nearly 1,000 members, have gone through and actually watched all of the workshops and all of the webinars, because it's like a food buffet. You're not expected to go in and eat everything or even eat a little of everything. You'll get indigestion. You should look, see what looks healthy for you, appropriate for you, what looks good right now. Maybe we'll take a couple things just in case you get hungry later, and you can use those ideas later and put them on the back burner. But then you can go after what you think is a really low-hanging fruit that looks just right for you and implement that right away, and for whatever's appropriate for the cost level, investment level, and type of investor that you're serving, because there's no one-stop solution advice for any one type of firm. We have members that are running operating companies. We have placement agents and capital raisers. We have private equity firms, a lot of private equity firm sponsors. We have real estate developers. We have fix and flip, single family residential. We have hard money lending. We have niche strategies like litigation financing and life settlements and hedge funds and different types of alternative investments. And we also have service providers like auditors, accountants, lawyers, et cetera. The service providers are the lowest percentage group. So you'll find in the Family Office Club that you can source a lot of deal flow, learn from peers, find accountability partners, see how others are kind of winning in the game of investor relations and adapt things from them. And a lot of the advice can come from people we have featured within the Family Office Club on stage at our Capital Con events, which we do once a year, that feature $100 million plus capital raisers. There are 80 to 90 strategies just from those talks alone in the portal. In fact, Evan last year at our event gave 25 capital raising strategies in his 15-minute talk. Somehow he talks about twice as fast as I do. So just in that one talk, he's giving you 25 capital raising strategies, and one strategy could make or save you $20,000 or $50,000. One strategy from one of those talks. That's why there's such a massive ROI on the membership in the Family Office Club. It's really been, my life's work over the last 13 years putting this together to be a holistic solution for you, because it's so multifaceted and it goes so deep on the content side. We also give you very specific custom advice with your capital raising audit. So the very first thing after doing a walkthrough with Jennifer is make sure you submit your materials to be reviewed by myself and Andres Ospina, who's the head of pitch6.com. and to give you custom advice on what you should do differently in your materials. Two more examples of capital raising strategies, just to show you there's no shortage of these. So I want to give a couple more away. Is that one thing we found to be pretty helpful. We've gotten 46,000 clicks back to our website just using Facebook retargeting. So you might not believe in reaching out to people cold on Facebook, but if someone's been to your website, they're in your CRM, you know they're a real potential investor, or they fit some demographic, you're highly confident in it, you can then retarget them by uploading email addresses to Facebook, or by saying retarget anyone that's been to my website the last 180 days, and show them ads on Facebook to get them back to my website and remind them that I exist, and show them my phone number, or show them my newsletter, or show them my helpful videos. And we combine that strategy with something we saw Gary Vaynerchuk doing, of having a whole bunch of educational videos, and we have those going so that we're getting advice and helpful insights out to the people who have already been to our website. It helps bring them back to our website. And in the last 2 years, it's been 46,000 clicks at an average $1.20 per click coming back to the website. So that's one strategy related to Facebook. Another one is targeting event venues and going in a 1 mile radius around them when your competitor is hosting an event, and then just dripping into their Facebook feed for your demographic, age, and gender, and any other types. You can dial in on Facebook and just turn that on a Friday, turn it off on a Sunday when the event ends, and now you have kind of a digital exhibit booth at that investor event. You can have getting website leads. We can help you with strategies on how to design a website and use live chat and use some sort of opt-in type bait to get leads into your website routinely. That would be pre-qualified to invest in what you do. We talk about that in multiple workshops that we host and have recorded. We have a strategy of, we've heard this from 3 different investors now, where they go into a deal, and the problem with being an independent sponsor, which is not having a secured fund, is that you have to run around and try to get the deal closed in 60 days. It can be quite stressful, and sometimes, close to impossible feeling with the virus situation going on if you're listening to this live. And so I know 3 different investors that when they go to a deal, what they're doing is saying, well, here's our due diligence list on Appendices, and until we get everything on that list, our LOI clock doesn't start, but we want to invest and we plan to close in 60 days, and here's the valuation. But that assumes that, the due diligence on the accounting works out as planned, and that 60-day clock starts once you get us everything we need on Appendices. And most people don't have themselves organized enough to get you everything you need. And it takes them 45 days of scrambling with their accountant, and normal business goes on, so they get too busy. And then you end up being under contract on that for 120 days effectively. So, if you make that list too ridiculous, then someone might balk, but that's a way to help you in getting capital raised. It could buy you double the time for a close on a deal. And that strategy alone could, if you don't lose the deal and you went hard on some money, or now you didn't waste your time or didn't waste resources, that alone could make or save you $20,000 or more just on the legal structuring of a deal that might not happen. Also, another thing is a direct mail drip. We talked about this before, but if you get your top 100 or top 300 investors and you print out thought leadership and you spend $1 per month mailing that out to them, we do it in a flat blue envelope with our family crest in the corner, and then we send out just the thought leadership to them. That's value add only. No one else is doing that. You'll stand out. And if you just do it with your top 100 investors, it's $100 a month. 100 envelopes is not going to overwhelm anyone. Even if it's yourself, I promise it's going to be a better time invested than the time it takes you to send out the emails that not many people respond to. So there's some ideas that I wanted to share that just shows, we don't have enough time to give you another 50 capital raising strategies, but the well goes deep and it's ever being refreshed. Every single day is being refreshed with new investors being interviewed, new things that we're trying, new things that we're doing with our investors. And we're motivated to attract as many investors as possible to Family Office Club, to the $100 million plus investors, to Centimillionaire Advisors, the mass affluent investors, to our privateequity.com investor portal. So we're right there with you, not doing the same business model you do, but we're trying to attract investors all day long and add genuine value to them. So we're very aligned in that way. So we take a really holistic approach. If you're watching visually, we'll coach you on getting into the right communities, having the right positioning, proactively reaching out and how to do so, acquiring choke points. We've got a whole 80-minute webinar just on choke points. I don't have time to even define it right here, but it's so critical. I think it's one of the top 5 things that made us go to 7 figures in revenue in just 3 years. So if you join, and let's say you join and you're only a member for 12 months or 18 months on top of the investor funnel, listen to our webinar on choke points, figure out how to implement your choke point. Ask us questions about choke points if you don't have it figured out or you're confused, and don't leave the membership without having your choke point in place. It literally could be $1 million value to you. And, I started my business with $800 in my bank account, and my rent in Harvard Square, my studio apartment underneath the house that was 300 square feet, was $1,000 a month. I didn't have enough money to pay rent that same month when I quit my job, which was raising capital, and then started looking for another job. My family office website took off, and then I started to make more money running my family office community than I was doing the capital raising job, because in 2007, no one was talking about this space. And then it kind of took off after that. It's 13 years later. And my point of bringing that up is that it is the choke points and the educational approach and the investor attraction and the positioning that allows someone with very little resources to have a big impact and huge visibility. And I had no other options. I couldn't spend money on advertising. I couldn't pay a placement agent $50,000 up front, which, by the way, you should never, ever do. But I also didn't have money to pay them $1,000 a month on a retainer, because I was just getting started. And so I'm used to that type of bootstrap mentality. And now we've gotten to be, last year was just under a $5 million a year business with 14 employees. And, we have been able to advertise and do other things, but it's still in our DNA to do things in a very resourceful way. The last comment here is about operating within your business. We talk about that at our workshops as well. And the point of all this is to get better quality deals and better quality investor communications and investor engagement along the way. We believe that you have to be holistic like this, or you're not going to be highly effective in raising capital. You're just going to have a hard time. It's going to be frustrating. If you're missing any one of these legs to the table, then it's going to be more wobbly. And why not have all the legs to the table in place? We're telling you what you need, how to put them in place, and we're not charging you $40,000 a year to do so. We're giving you the tools, the templates, the workshops, the examples, the interviews, the Investor Summit access to get it done. So on the homepage of familyoffices.com, you can see all the different types of mandates we have: real estate mandates, Northeast region of the United States mandates. We have Southeast region, angel investor, $1 billion plus family offices, emerging trends, emerging managers, alternative investment mandates, et cetera. These are all different types of investors we have who have either spoken at live events, or they're one of our daily investor interviews or weekly discussion panels, which go up into the member portal and are not seen otherwise. And so none of these investors are paid to speak, in case you missed that earlier. None of these people are a famous Oxford professor who wrote some peer-reviewed article that really, when you're raising capital from a functionality of are they going to invest in your deal, you really could care less about. Everyone's learning strategies, but at the end of the day, people want to hear from investors who could write a check and could invest and could JV or be a co-GP or be an LP in your deal, or a passive investor in your company, or invest in your convertible note. And so those are the investors we interview, not famous people that wrote some book. And maybe my podcast would be more popular if we interviewed a bunch of famous people, but we interview investors for better or less. On our homepage, you'll see the main club benefits, which is access to our virtual discussion panels, investor discussion panels, access to our 2,000 plus investors in our community, access to our daily investor mandates. We have over 400 new investor video interviews being uploaded every year. And you can access 450 plus of those right now by logging in once you join as a member at familyoffices.com. We have 130 proven capital raising strategies is what our website says. I know we have well over 150, and we're cataloging those so we can get the number dialed in just right to be accurate. We have 42 niche investor databases, and when you join, you get 100 investor leads as part of your membership. So you can just see what the databases look like, how they function, and get a feel for how that part of our business works. But as you register for a member, if you want to tack on a investor database purchase or be a VIP member, which comes with a bunch of investor databases that you'll see detailed there on the homepage of familyoffices.com, then those are some options for you as well. We do pitch deck. This is completely free. If you just take a step back and just think of everything we talked about at this point, and just for 1 second, just forget all of that and think, okay, well, what would it be worth to have someone who works with investors and family offices every single day for 13 years and does nothing else but think about that niche topic, be reviewing my materials and giving me detailed feedback every 3 months? What would that coaching be worth? Would it be worth $5,000? Would it be worth $10,000? That's free. And it comes with the $299 a month membership or the $1,450 per year membership. It's free. And only about 20% of our members leverage it because they don't realize it's in there. They don't take the time to explore the portal or do the onboarding call with Jennifer, perhaps. But I really think that alone is worth the price of membership. You know, I'm biased because I'm the one hosting the membership, of course, but a lot of people just overlook that, and I don't get how tweaking some of the approaches in their materials, their process, their approach to investors, their branding, their one-liner, their visual aspects, so people get what they do instantly upon viewing it. The most valuable investors have 30 seconds to figure out they should take a call or a meeting from you. All of that is so much more critical than I think a lot of people realize. And you'll hear investors on stage at our investor summit stressing that over and over and over again, that you have 15 seconds to get their attention, the first sentence of your voicemail, et cetera. So don't miss that benefit. We also have, the 2,000 members in the investor club are always interacting with members in all different ways. We have Blue Pages listings. So when you're a member, you get a free listing in the Blue Pages. It's like the Yellow Pages for the family office clubs. You can find other members, you can network with peers, you can get access to deal flow or co-GP with other people in the family office club, and that could be a big benefit for many of you. So I'm showing the three types, the main three types of membership we have here. There's premium charter membership, where you get access to the 450 investor mandate interviews, the pitch deck coaching, 130 capital raising strategies, and that is $1,450 per year for membership. When our events start up again, you'll get access to the events till the 1-year date of when you bought that membership, and then you can renew at that price is what we're allowing under the current membership. Will we change that at some point? I'm sure we will at some point. When events come back, we'll probably raise it to $1,997 a year and then quickly back to $2,450 a year. If event size is restricted after the virus thing half lifts, whatever that's going to mean, if it does, then we're going to be making it so that the events are more premium, and the price to be able to come to the events will probably be at a far premium, and the digital only will be staying around the same price. So if you want to lock in that savings, choose the premium charter membership. The VIP charter membership comes with global directories of investor databases in many different areas and thousands of investor contacts. That's $3,250 a year, $3,250 per year. And then we have our premium charter membership, which is monthly, which is $299 a month. So if you do monthly, the annual math comes out to just under $3,600, but you might as well do the annual at $1,450. It's a much better deal. Then you're part of our community for a 12-month period, or to do the VIP so you can get access to the investor databases as well. Here's a slide visually to show you some of the, what's included that I may not have described completely. The Blue Pages, sometimes people refer to as our service provider directory listing. If you see that listed on our website, that's what that is. You also get a 25% discount on all of our investor databases that you see at familyofficedatabases.com. If you're a member, you get 25% off on all those databases. And if you log into your member portal at familyoffices.com after joining, you'll see the database options in there, and your database access provided right there in the same login. So it's really easy to use. The other thing I wanted to mention is that we have a family office certification, we have a capital raising certification, we have a private equity certification, investment banking. Many people don't know that we have over 6,000 people that have joined our self-paced certification programs. We actually started that in 2007. And you can see that at investmentcertifications.com, but it comes for free as part of your charter membership. So if you're thinking of joining and you want to use the member portal, but maybe someone else on your team needs to get certified in capital raising or certified in the family office industry, you can have multiple people accessing the portal with that one login. It's just when the live events come, only one person from your team can attend one specific event at a time. Someone else could attend the next event, et cetera, but only one per time per membership. But multiple people could be, using the certification. Another person's watching webinars, another person's going through the investor summits and looking at mandates. And someone on your team should be tasked with really building out that investor funnel and getting your positioning dialed in and figuring out what a choke point is and how to implement that. I can't stress that enough. I would just not want you to go through membership for 18 months and not have an investor funnel that's superior to all of the other competitors that you're going against head to head. And if we never speak again, or we just bump into each other 10 years later, but you got that investor funnel in place, I know you're going to be happy with what you got out of the Family Office Club. So I just want to really stress that you work on getting that in place. So here's what it looks like when you log into the member portal. You can see the database portal. You can see event recordings. You can see how to add your Blue Pages listing. We just revamped all this user interface, so it's very easy to use and very intuitive. You can submit your materials there, get started on your certification, and you can watch some of our weekly investor discussion panels and all of our other 450 plus investor mandate interviews that are quickly expanding here. So that's what it's going to look like once you log in. And then there's 3 next steps here and just kind of closing notes. One is to, I'd really like you to go and register right now for membership in the Family Office Club. It's a very interactive investor club in the sense that investors are coming to get access to deals, and then those coming with deals obviously are coming to raise capital, but then also we're providing you this foundation of best practices, insights, costly mistakes to avoid. And if you just only avoided some of the top mistakes, it would more than pay for your membership, 10 times over. So I really encourage you, once you log in, to start watching the Capital Raising Catalyst, do your onboarding call with Jennifer, and start digging into that content. It's a perfect time to be doing so. If you're being quarantined while listening to this, I know you might be listening to this in 2021 or 2025, but we're recording this during the virus crisis. Also, to that note, obviously, if you watch this 9 months later, no, we can't honor the pricing that we showed here. If our pricing changes because miraculously everything lifts in May, and we can go back to hosting the big events, and our prices are going to go way up from where they are now, and it's going to be a different price. So just check out familyoffices.com for the current pricing if you're not listening to this live. So make sure not to miss your onboarding call with Jennifer. And I just want to emphasize that now is really the time to be focusing on output and making big progress. We're not sitting in TSA security lines. We're not sitting on airplanes. We're not sitting in Ubers. We can knock out more work per day now than I think we normally can. And for some of you, your investment might have great appeal during this time. You could be planting many different seeds with investors. For some of you, you have a lot of homework to do on positioning, on your branding, on your one-liner, on your investor funnel, on your choke point. So even if it was a good time to raise capital, you maybe have a whole lot of homework you want to knock out for 2 weeks or for 6 weeks, and then start going out to investors more heavily, or be doing both in tandem. But in any case, I think everyone can improve in some of the things that we talked about here today, including myself, honestly. We're constantly improving, and that's what keeps my life dynamic and interesting, is always listening on stage to what investors want and how we can be getting more progress, so that we're not a $5 million a year company. We want to be a 10 million, a 20 million a year company, et cetera. Or instead of getting 130 million in assets in last year to our wealth partners, getting in 500 million in assets, is my ambition. So we're always improving as well. The investor interest, I also want to emphasize, the investors we interview are being interviewed. I'm not paying a single one of them to interview. That's probably obvious, but I'm not paying them or bribing them or giving them a fruit basket for being interviewed. They're doing the interview to get exposure to our investors. So like this morning, I interviewed Ian from Band of Angels. It's one of the most famous angel investor groups there is. I didn't realize my team had set up that interview with him today, but that was great. I got to talk about his perspective on angel investing, top mistakes investors make, what mandates they're looking for, who they're looking to invest in right now. We interviewed an $850 million single family office just last week, what they're looking for right now during the crisis and after. We also interviewed $200 million plus single family offices about how they co-GP on deals and what they're looking for right now and their number one investment mandate objective. So all these interviews are done with investors who want to get access to deals. They're not just sharing things because they are theorists or because they wrote a nice book or they used to be in some big position in government or a professional athlete. They're not speaking because they're famous. They're speaking because they're investors. So I just want to reemphasize that and make sure nobody misses it. And if you want to get started on membership, I just encourage you to go to familyoffices.com. The 3 membership options are up here on the screen. And I'm going to jump into question and answer now. Let me open it up here real quick. One question from Andrew: how do we differ from other organizations? Well, when we got started, we saw that other family office related organizations were generally charging family offices $15,000 to $30,000 a year for membership, which effectively drives away a percentage of them, delays some of those investors joining. So they have to figure out, is it worth paying $50K or $30K? They didn't become ultra wealthy by throwing around $30K left and right. It's stuff they don't understand. And so we make it so that family offices can be part of our community at no cost, and on a more engaged basis. If they become a client of ours, they get access to kind of proprietary deal flow that we're sourcing through our platform. That's one huge difference, is that we are basically making it so there's no friction for the family offices to come in. So we have the most family offices as members. The other big difference is that we have a membership for people raising capital. It's like a Netflix membership if people want to try it out monthly at the $299 a month, or annual is a much better deal at $1450. But that's unique. And our events have full day capital raising workshops and investor summits. You'll see recorded in the portal. And so you get both 30 investors in a single investor summit on stage, giving you advice, strategies, structures, preferred fees, and their investor mandates. But then you also get at the workshops, me speaking quickly like I am now, giving you many, many different strategies, many case studies, many examples. And that way the combination is you're learning from investors, you're learning from me and our other capital raising coaches. And then you're also learning who you could be joint venturing with, co-GPing with peers. And you're also seeing what investor leads are in the community. So you have all those benefits going on because it's more of like an organism system, not just one thing like, oh, all we do is host investor summits. And a lot of our competitors, quote unquote, are just robotic, conference hosts, or their membership community, which charges a lot of money to the investors, which drives away a lot of investors and causes friction. What does an investor agreement for private equity look like? What is it exactly? I don't want to spend a ton of time on this, but at privateequity.com, it's not to register for raising capital. If you're raising capital, for sure, go to familyoffices.com and register for membership there. Privateequity.com, we can only work with you if you are an investor looking to invest in deals. So you want to be a passive investor in other people's deals, or you're ultra wealthy and you're looking to acquire whole companies. Then you complete the 5-minute form on privateequity.com. It's basically an embedded DocuSign on the website. You become an investor client of ours. We look at your mandate survey. You schedule your onboarding call through the website. We then do the onboarding call and we bring deals to you that meet your criteria and that are kind of our right down the fairway, conservative, relatively low risk type investment deals. And we source those deals based on the thousands of things flowing through the Family Office Club. My 14-person team is interacting with 40,000 to 50,000 people a year just via email and phone, 6,000 people a year in person. And we're bringing the top couple of deals to investors at a time, and then whatever's niche specific to where they created their wealth typically. With respect to deal flow, is there a sweet spot for your firm? There is no one sweet spot because we're not only offering the doctor's family office niche. We're not only doing healthcare deals. We're not only doing manufacturing deals, et cetera. But if I had to define a sweet spot, I would say that we take startup opportunities only to people who made money in that niche or who are investors local to them is what our advice would be to you, or who we'd bring to our investor community in terms of a match. But also deals which are ran by a relatively well-respected team in terms of being established, that have some momentum in the marketplace and have a good unique value add process. Also, those that don't look like everybody else, I think is really critical. Like the advice I'm giving you in this webinar is because that's what all my investors are asking for. So a lot of the things I'm suggesting you do are things that are making it a sweet spot if you have these things in place. You have a unique structure or strategy. People lean forward when they hear what you do and say, wow, I've been looking for that, or I've never heard of that before, or that seems much more aligned, or that's interesting. Like that seems much better than what we've heard from the other 50 real estate groups we've heard from, et cetera. And if you don't feel like you're there yet, then that's a reason to join membership so we can get you there, because that is what most investors want. We speak to thousands of them every year and we get the feedback constantly. A copy of this recording. Yes, we're gonna send you a copy of this recording and a thank you email, which should go out tomorrow. Carl has a question. Carl, I know I had some follow-up with you at the workshop. We got to chat recently in New York on the 9th of March, the last event we did. And I know we have a follow-up there we needed to do. So I'm happy to connect with you via email. Typically as a member, if you have questions, you go to jennifer@familyoffices.com or clients@familyoffices.com. And part of my team will help you out as a member, just kind of FYI. Okay, we have a big long question here from Jay. Let me see if I can just answer the first one or two questions real quick. The main types of professionals who find membership worthwhile. Anyone who's looking to attract investor clients, work with more investors, raise more capital, be more effective at raising capital. If you think I'm gonna be the person that's going to, for a commission, go out and find you the 18 investors you need to get your raise done, that's not me. There's 1,000 placement agents out there. And we just don't do that for you, no matter how good your one-line pitch is to us and how big that fee is, we don't do it. We represent investors and we get fees from them when our investments make them money. We just get part of that upside fee. We don't charge them like an assets under management fee like most groups do. Clarify what you mean by signing X number of investor contracts. Oh, we have we've been able to register 86 new investor agreements through privateequity.com. So we're now representing that investor in terms of their direct investment portfolio, and we get a performance fee on deals they invest in through us. And out of our 2,000 plus active members in the Family Office Club, we just launched that on January 20th, and those are the 80 that have engaged with us through there to get kind of my personal time on getting access to our proprietary deal flow. We're hoping to get to 250 by the end of the year. Another question, how often do we get inquiries from investment banking firms? Quite often. And yeah, we work with a lot of investment bankers within the group, but I would say that most members are not investment bankers, but there's many in there. Samir, what is our contact information? Clients at familyoffices.com. And then the phone number is 305-503-9077. It's 305-503-9077 is the phone number, and it's clients, plural, at familyoffices.com, plural, to get in touch with our team. Do you make referrals for real estate attorneys, CPAs, etc.? Yes, we do. Stoney, we can help you with that. If you're a member, just connect with Jennifer during your onboarding call. Let her know what you need, and we can help you get that all set up. We're affiliated with a syndication investment law firm. They can help you. We just referred over a pitchdex.com client to them yesterday. We also know a great accounting firm, the number 6 largest in the United States, and their institutional quality. They serve over 500 family offices and over 1,000 private equity and real estate firms. So I'd be happy to help you out on both of those. And yes, the visual is being recorded. Is your network based in the US predominantly? We're strongest in the United States, Canada, and then London, Singapore. Those are our strongest places. And so we have our investor interviews being done globally. We just interviewed an investor in Prague. We have an investor we just closed a deal with in China. We have investors registered with us in New Zealand and Australia, et cetera. So we're global, but we're strongest in the US, London, and Singapore for right now. Databases, if discounted 25%, must be offered an additional cost to base membership prices. Can you clarify? So what I'm saying is that if you become a charter member and go and register at familyoffices.com, then we're offering databases at a 25% discount for any of the databases that you want to acquire. And that way you can go find the niche database that you want, add that onto your membership, and you're only paying for that niche database. If you buy VIP membership, it comes with the set number of databases you see on familyoffices.com. You can see what VIP includes and does not include. All right, here's a question from from Helen. We specialize in identifying, I think it's just someone just sharing their information here. More about the certifications. Yes, the certification programs are self-paced. You can log in, you can take 18 months or 18 years to do so. I hope we're still doing well in 18 years from now. Or you can do them in 18 days if you want to, but it requires watching videos, audio interviews with experts, and you look at the videos, the practice exam, and a required book or two, and then there's an online exam. And so I'm glad you asked this because I forgot to mention actually, if you go through and watch the capital raising certification workshops and you go through and watch 3 out of the 5 or all 5 of them, you're probably going to ace the capital raising certification because we cover things in such depth there. We also have a book on capital raising. And between those two things, you can do very well in the capital raising certification test. But the best way to use the certifications are to get your knowledge deeper in the family office or capital raising spaces if you came from outside those spaces. It's a way to certify you have some base level of knowledge in the space. And we're accredited by the CPD out of the UK. It's not the US government because we're a continuing education, self-paced certification program. We're not a school, we're not a university. No, it's not accredited, so you can't roll this into your university and get credits towards graduation. It's just accredited that we meet some quality guidelines and that, we're taking a professional, serious approach to it. We have been for 5,000 participants over the last decade plus. How can startups leverage your website for raising seed funds? Many different ways. First, join charter membership. Second, get the 25% off on the niche database at familyofficedatabases.com. That is the best match for what your thing is that you're raising capital for. I would then go in, do the onboarding call with Jennifer, watch Capital Raising Catalyst, make sure your positioning is all dialed in. After you've watched Capital Raising Catalyst, submit your marketing materials to us for review. Don't wait till you think they're nice and great looking. If you're building those right now, because we can give you feedback that's going to totally change the direction of maybe how you name or brand things, your one-liner, how you visualize the assets that you have in your deck. So if you do that, then we'll help give you feedback and point you in the right direction with the feedback on your materials, whatever state they're in. It could be a one-pager and a half-done website. Then we can give you feedback, point you in the right direction, and every 3 months you submit your materials again. So I wouldn't delay 2 or 3 months before submitting the materials, because even if you submit them and all you have is a couple of paragraphs and say, hey, do you have any feedback for me? I'm just starting out. This is direction I'm in. What's your feedback? Then you can also do it again 3 months later when they are half done or all the way done. So I think that's really important to point out. Our membership is a 1-year membership or a monthly membership. Those are the 2 time links that we have right now. The best way to cold call, email investors or family offices. Well, the best way is to have them cold call and cold email you. That's how we built our whole business. Out of the 86 investors that we have gotten in, they've all came to the website and registered and became a client. We didn't call them up and ask them to register. They're just part of our community already. If you are going to reach out, the best way is to craft your one-liner that describes yourself in such a compelling way, because you know yourself, your competitors, your investor set so well that you're playing in that white space and the gap where others are ignoring, and you can add the most potential value. And by reaching out with that one-liner, you're going to get maximum response rate. And if you reach out to investors who are qualified and you see who they are and how to add value to them first, then that's going to be the most engaging thing. So you might be able to connect them to an investor peer of theirs. You might be able to give them an educational asset of some type that's relevant to them. You might be able to give them guidance on something at no cost. You might be able to see something they do in a way you could help them get deal flow or an introduction to an investment opportunity that is not you selling something, but just would be helpful to their portfolio or help them de-risk things. Those would all be ways, but adding value first, getting them to come to you and cold call you are the 2 best kind of themes, and just leading with a one-liner. Your email should not be more than 3 sentences long unless you're engaged with somebody already. And if you can get it down to a sentence and a half, all the better. The shorter, the more likely it's read and the more likely it's responded to. Any packages or opportunities for people in Asia or Africa, it's the same package no matter where you're based out of. We have investors being interviewed globally, and the strategies work globally. We have members from all over the world who come and join the Family Office Club. Is this appropriate for small business deals, Gary? Yes, for sure it is. Probably 25% of our membership are operating companies or people raising capital for an operating business or to acquire one or for growth capital. So it's for sure relevant. And even if you're raising $1 million in capital, just the legal fees around that alone, you'll be lucky if you get through it with $12,000 to $20,000 in legal fees. Maybe some through a low-cost lawyer might get through for $8,000 to $10,000 in legal fees. Then you're usually needing to travel. You're usually organizing the data room. There might be background checks. There might be having an accountant clean up the books. There's gonna be a ton of your personal time prepping, going through the phone calls, meeting with investors. I mean, you're talking about $50,000 to $75,000, if not $100,000 worth of your time and real money from your checking account leaving to get a capital raise done, even at $1 million or $2 million. So spending $1,450 for a year-long membership that could help you avoid a $10,000 mistake or help you get 3 buyers to the table so that your valuation goes from 1 million to 1.3 million, because it's a little bit of an auction situation now. Then that is all going to be something that, we can help give you those strategies that helps you get that better valuation and help you get this done more fluidly. Can I upgrade my membership to VIP during my membership year and paying the difference, or do I have to pay both? Yep, you can upgrade. You could be an annual member and then upgrade to VIP once you find out everything I just said is actually real, and you log in and you're like, okay, the strategies are real. You really did for 5.5 hours on just that one workshop. Give me so many ideas. I could be busy the next 3 months implementing these ideas. As you start looking through the content, and then if you realize that and want to upgrade, we can do that for you. But the whole point is to give you far more ideas than we expect you to want to or be able to implement right now, because 20% of the ideas you won't be able to use. 20% will be for only firms that are advanced, but we want to give ideas that no one's ever heard. Even if you've already raised 100 million in your career, we want to give you new ideas. And then there should be a fair way of ideas where you just need to make like a totem pole list of most important idea, next important, next important, and next important. and have your implementation plan in place. With a new quantitative RIA, benefit from your services, not an LP fund. Yes, Peter, would for sure. Happy to, we have our RIA in place as well, so I know how that works. We have RIA client members in the oil and gas space, and the hedge fund space, and the alternative investment space. So I understand that space well. What about SEC compliance from Raj? Not sure what you mean. What about SEC compliance? Maybe we could do a week-long workshop on SEC compliance, but I wouldn't be the person to do it. So I think that, let me know if you have a more clear question on that. I'm happy to address it. Does the $1,400 a year membership come with any databases at all? The $1,450 a year membership comes with 100 investor leads from a regional database from your region. So if you're based in Europe or Asia, or if you're based in the Northeast of the United States, then we'll give you 100 investor leads from that area, from many of our different investor databases, so you can get a taste for how they look, how they feel, what information is in there. And then that way you can kind of see what you would be getting if you used our database services. But that's all that's included in the normal annual membership. Having trouble attracting money for seed company, does your investors? Yes, our investors invest in seed companies all of the time. It's going to be most likely investors that already know you or who are local to you. So they might not know you now, but they're in your region and they're within, a drive away or a 1 or 2 hour commuter flight, when you can fly away, or in your city. Or they're going to be investors who made their money in your niche or related niche, so you don't have to teach them the ABCs about your space. The more complicated your space, the more that they need that background in your space to be able to get them to go in at the seed level, I've found. Okay, how are you different than an investment bank? We are nothing like an investment bank. This is Jen is asking. We are nothing like an investment bank. An investment bank is going to say, let me help you raise capital. We're very experienced, so we have to charge you a retainer because it's our investment of time, and you might mess up the closing, and we might bring you a great investor, and then you change your mind, or and say something wrong, and it gets messed up. So we're going to charge you a retainer of $3,000 a month or $5,000 a month, or, oh, by the way, your materials are a mess, so we're going to charge you $30,000 up front to redo your materials. And basically, then they're going to take a 1 to 2% fee on capital they raise. If it's a small deal, they'll take 3 to 7% on capital they raise. Or if they're a placement agent for a hedge fund or someone with continual fees, they might take 10 or 20% perpetuity on fees you generate from capital they raise for you. We don't do any of that. We do things that everyone else is not doing because we feel like otherwise we'll just be lost in the sea of competitors. So we provide workshops on how to raise capital, investor databases, review of your pitch deck materials. If you want us to implement all the strategies that we teach and implement those for you, instead of hiring a college graduate for $3,000 a month, you can hire my 4-person pitchdex.com investor relations marketing agency on a retainer basis. Most of our clients are at $2,500 to $5,000 a month, or fewer at $8,000 to $10,000 a month, and we can implement the marketing for you. And then we have our investor mandates and interviews coming in every day. We have investor leads for you coming through the investor portal, as well as all the insights from hearing the investors and what they want, what they don't want, structures, fees, strategies, preferences on being approached. So an investment banker is not going to have a membership portal for you. They're not going to host live events for you. They're not going to give you intensive coaching. They're not going to give you databases of investor leads. They keep those all private. They're not going to equip you to raise capital yourself. And one way to view our membership is that even if you intend to use an investment banker and say, no, this isn't for us, I need to hire an investment banker, I don't know how to do this, you're going to get the wool pulled over your eyes so hard if you don't know which way is up. If you don't know exactly how gravity works with a specific type of investor and what you should be doing, then you're going to get taken advantage of. You're going to pay a huge upfront retainer. You're going to pay a retainer and get nothing in return. And you're going to have a very hard, frustrating time raising capital. So even if you do think 80% of your capital is going to be raised by a third-party marketer or someone you outsource this to or someone you hire, you still need to join the membership so you know who to hire them, how to manage them, how to measure them, what key performance indicators to have, and how to measure their success and their progress going along. Question about registration. Yes, you can register over the phone with us, but you can also just go to familyoffices.com, scroll down on the homepage, and you can register right there to become a member today, and we can get you onboarded later today or tomorrow. If your service appropriate for a company who wants to work with a family office regarding investment projects, but not looking to raise capital. Yes, for sure it is. We have about 10% of our membership are looking to work with investors, but not on an investment basis, more like as a client or advisory or consulting or something like that. How do I schedule a 5 to 10 minute call with you to strategize on how my firm can best work with you in the Family Office Club? It's from Matthew. Matthew, you can do so just by emailing clients@familyoffices.com. With just under 1,000 live members and 50,000 people a year interacting with our team, we're having these calls every day, 20, 30 times a day. So if you email clients@familyoffices.com, we can have someone on our team schedule that call with you. Once you become a member, you can submit your materials and you'll get my personal time looking at the materials and giving you feedback. If you become a pitchdex.com agency client or some advisory board type position, which we usually only do with 100 million plus assets under management groups or groups that are doing a few million in revenue already, then those would be the times where I'm able to give strategy one-on-one just because of the number of members we have. But I hope you see through the webinar, our intent is to be as genuinely helpful as possible through the whole process. I've got a really excellent team. When you interact with us, I think you'll see, I think that's really core to how I've been successful. Does the Family Office Club present to investors investment opportunities from only capital raising members or both members and non-members? We're really, I don't want to say only, but 99% of our energy is going into the members because, one person got introduced to me and he's like, oh, well, we got this great investment structure. I've never seen anything like this. And, how do I get on your list of like top few investments? And I want to get on that like next week. I was like, well, it's just not happening. Like it's not happening next week. I don't know who you are yet. I'm only putting things in front of my investors that are unique, compelling. I actually understand them. I like the people. They're credible. Their value add process makes sense. It seems sustainable in whatever economic environment we're in. And that I know investors I have under contract are a match for it. But we have 2,000 investors in the Family Office Club. That's just my 86 investors. And so being a member allows me to get to know you. It allows me to keep you in mind. Obviously, if you're at pitchdex.com and you're one of those 81 investor relations agency clients, you're that much more top of mind, but that's not required. It's really, we're aligned. My investors and I are aligned in that the better quality deal I can pick out of this whole system that we've created in the Family Office Club, then the more that my investors will be happy and get good returns. And I only make money off their investments when they get a profit. I get a profit share. I don't make money when they just invest. It's only when they make money. And then also we're aligned in that me just showing the teaser of an investment deal, like investing in a chain of 5 dental clinics or a chain of 100 burger franchise locations that does 100 million a year in revenue, the average investor has no idea how to source a deal like that. So being able to have those teasers and show that to my investors is what gets them to sign the contract. So the more valuable teaser set I can compile and the more quality deals I can bring, and the more that someone can say, hey, do you know any great companies in manufacturing or fintech? And I can ad hoc say, yeah, you know what? I was doing a capital raise audit yesterday, or I was on a webinar the other day and I connected with Carl, who has his breast cancer identification and treatment out of Sweden. And he seems like a legitimate guy. I haven't done the due diligence on his data room yet, but if that's what your background is in, Mr. Investor, then, just eyes wide open on how well I know him. And I can just transparently be ad hoc bringing them very interesting opportunities niche to who they are. So I think that's really important to mention. So the best thing about the Family Office Club, I believe, is all the strategies we provide. It's not getting a fish or two from us. It's us teaching you how to be an expert fisherman in investor relations or fisherwoman or in capital raising. And that is truly the biggest value, but there's for sure investor leads being uploaded every day and connections we could potentially make for you if we get to know you. But like I said at the very beginning, it's all about trust and who you are and what you do, not what your claimed results are. And just like Damon John said on Shark Tank, he projects next year he's going to look like the guy from the movie Thor. Anyone can project anything. So the projections mean a lot less than who someone is and who their team is. I work with real estate investors looking for debt and equity. How would I benefit as a member? So you benefit as a member by learning how to find the debt and equity faster. We actually have a CRE debt related partner that can help with the traditional debt. I'm happy to connect you with directly, Diane. But on the equity side, everything I talked about here on this webinar, I think is relevant for getting your equity financing in place. So I would just encourage you to look back at that information shared, because I think that there's many different strategies here that be pretty much all relevant to what you're doing. Let's see here, just 1 or 2 more questions. We're a bit over on time here. Will this platform allow me to find an investor partner to fund an unidentified business to buy, like a search fund? Yes, it could. Search funds are always extra hard to raise capital for, but all the more reason to use all the different strategies to give you an advantage compared to others trying to raise a search fund. So for sure we can help with that. We've got a few members that are doing search funds right now. Do we take commissions or fees from the vendor on the capital you help to source? No, for sure we don't. If you want to do a member spotlight interview and have me interview you for 7 minutes and get exposure to some of our community and exposure on our social media, right now we're doing that for $34.50 or $5,500, depending on the version you do of it. If you want to be on the podcast, it's $24.50. If you want to connect with Ellie on my team to discuss those options or extra exposure options, it's just Ellie, ELLIE, at familyoffices.com to learn more. But we don't take a commission off of the success of you raising capital or connecting with an investor. We got some questions on pricing for the databases. I'll just encourage you to go to familyofficedatabases.com. There's a live chat there. We have an email at the top, a phone number at the top. I don't want to get into very specific questions here unless it's helpful for everyone to hear the difference or to hear the answer. Is payment for your membership packages due in full today? Or can we do half this week and remaining balance next week? So $14.50 is the membership cost, or you can do $2.99 a month and then upgrade to the $14.50 if you wanted to. So you can always sign up for $2.99 today and upgrade to $14.50 next week and pay that difference. That'd be the best way to do it. So just register at familyoffices.com for the $2.99 a month option. And then next week, when you want to pay off the balance, you just pay the $14.50 minus $2.99, and then you'll be locked in for the year from that date of your first payment, since those are so close together. So do you raise for third parties? We help you raise capital more effectively. We help you raise capital in 10 different ways, as described on this webinar. We're not taking a percentage. We're helping someone go 55 miles per hour through the jungle instead of 40 miles per hour. And we're equipping you with tools, strategies, insights, examples, investor leads, etc. What percent of the $100 million plus families in the US are members with you? How does that compare to your largest competitor? This is from Matt. I don't know what percentage are. I do know that we have, the number one or one of the only books in the space. I know we have one of the only advisory firms focusing on them, but I'll have to look up and see what that is. I'll have to see what that percentage is. So maybe I can get back to you on that one, Matt. And I don't know what my competitor's percentage is, obviously, if I don't know my own, because I don't know how those percentages break down. James, how helpful have you been with oil and gas? I want to attract investors. We've been able to develop some good lead gen strategies and help get exposure for oil and gas. I think it's less crowded of a space than some other spaces. So I think it's a great area to be using our strategies in, because there's that educational need to bring people to oil and gas investments who maybe should have some diversification there and they don't right now. So I think it's especially helpful for the investor funnel idea and the choke point ideas. Okay, we make it say, okay, to be an investor, how does that work? Yes, if you want to be an investor, you go to familyoffices.com. All right, so we have, we went long on the Q&A. I guess I've been doing 45 minutes of the Q&A now, but I think I got through everybody. Thanks for completing the poll if you did that. I know we still have 250 people here on the line. If you have any questions about membership, I'll just stay on here for another couple of minutes. If you want to go to familyoffices.com and register for membership, and as you're going through that registration form, just see if you have any questions, then I'm happy just to stay on here for another 3 to 5 minutes in case you have a question as that comes up. Otherwise, there's live chat on the website. You can email us at clients@familyoffices.com, or you can call 305-503-9077. It's 305-503-9077. And if you are raising capital right now or looking to connect with investors, then I definitely think that our membership is for sure going to be a massive help to you. And we've designed it holistically so it can be helpful in many different ways, which de-risks your risk of going into the membership, and it de-risks my risk that you join and you don't find it relevant or helpful, because we've designed it to be helpful in about a dozen different ways. So look forward to seeing you within the membership, and I'll hang on here for just a couple minutes in case anyone else has questions here. a reminder from the team here about familyofficedatabases.com. The 42 niche databases are all different databases, and the functionality of each of them is going to work differently based on what you're raising capital for, what stage you're in, and it might not be one database, it might be 7 different databases, it might be 2 different databases. The databases you may want to get might be very intuitive when you go to the website. You might know very well what you need, or it may not be, and you can work with our team if you're not sure which ones are most relevant. When you get VIP membership, it comes with a set number of databases. When you get an annual membership, there's no databases included. You just get a set of 100 investor leads from your region of all different investor database types, because we've gotten so many, literally thousands and thousands of questions over the years about what cells are in there and what's included, what's not included in all those contact details. So I just wanted to make sure that that's super clear. What percentage of your members are in the UK or Europe? Right now, I probably have 5 to 10%, you know, probably 5 to 8% in the Europe, same with Asia, but we see London and Singapore growing the fastest. All right, I think that'll be it. I'll leave the chat open for the next 10 or 15 minutes here. In case anyone has another question, feel free to type it in on chat, but I appreciate everyone's attention on the webinar. I know I went a bit over on time, but it seems silly to speak for 45 minutes and then ignore your questions, since that probably matters more to you than whatever I'm saying before that. So I appreciate those of you who had patience to stay on during this whole time. And I really hope to see you within the membership so we can start looking at your marketing materials and get to know you, keep you in mind, and just share what strategies we would use if we were in your shoes raising capital right now. So take care. This is Richard C. Wilson, and welcome to the Family Office.